Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, January 7th. A batch of negative news items provided market participants with an excuse to sell into the stock market's recent gains. Trading volume remains low, though, suggesting there is still little conviction behind the moves. Heading into the open, stocks were up roughly 3.5% through the first few sessions of 2009. Stocks finished this session a bit off their lows with a 3% loss, which is the largest decline in more than 1 month. Only 1.2 billion shares traded hands on the New York Stock Exchange. Though that is in line with recent levels, it remains well below longer-term trends. A worse-than-expected ADP employment report and a warning from Intel underpinned early weakness. The ADP report indicated 693,000 jobs were lost in December. The consensus called for 493,000 job losses. The data support economists' opinions that government data will show a rise in the national unemployment rate, which is scheduled to be announced Friday. Intel cut its fourth quarter revenue estimate for the second time due to continued weakness in its end markets. Shares of Intel traded markedly lower in response. Their weakness weighed on the tech sector and the Nasdaq. Dow component Alcoa also made headlines, though its story wasn't much of a surprise. The company announced it will reduce output, capital expenditures, and its global workforce as it contends with the softer economic environment. Bank of America also made headlines when it announced it is selling part of its stake in China Construction Bank for some $2.8 billion. Bank of America and peers JP Morgan Chase and Wells Fargo traded as laggards in the financial sector, as investors were reminded that banks have a long way to recovery. Analysts at Oppenheimer expect banks will have to raise capital in 2009. Financials finished 5.1% lower, replacing energy as the session's worst-performing economic sector. Energy shed 3.9% as crude futures fell nearly 12% to close just below $43 per barrel. Crude dropped as bearish inventory data put demand concerns back into focus amid a larger-than-expected inventory build reported by the Department of Energy. The materials sector was able to limit its losses due to strength in Monsanto. Monsanto reported better-than-expected adjusted earnings and raised its outlook for fiscal 2009. The outlook remains short of the consensus forecast, though. Still, Monsanto gained nearly 18% to finish at its highest level in nearly 2 months. That provided a bit of relief to the beaten-down materials sector, which finished 1.6% lower. I'm Jeffrey Ham for Briefing.com, and thanks for listening.